Hello everybody, welcome to the webinar. My name is Troy. I'll be presenting today. I'm a senior account manager with AvaTrade. Just give me an okay in the chat box if you're hearing me clearly and seeing my screen all right. All right, looks like we're up and running fine. Thank you. I've got enough responses. If anyone has any issues as we go along, please let me know. A lot happening today, obviously, in the markets with the US elections being the biggest headline of what's going on. It's obviously going to be a deciding factor with how the markets move. Quite a bit of opportunities with the about moderate level of volatility, I would say, not through the roof, but enough to really get some nice movements today. So the trading's been nice, and it still can be through the evening and through the night. There may not be a declared winner for days to come, so the volatility and the nice opportunities could continue even through tomorrow and the rest of the week, for that matter, in connection with the election results as they come in. So we'll look at the technical analysis in a moment. As we get going, as always, keep in mind, especially those of you that are new to things, I know we have a lot of folks that attend the webinars that maybe don't even have live accounts yet. So welcome to any of you that are new. And to you veterans, you've heard this before, but it's worth repeating. Keep in mind that all investments have risk. No one trade is guaranteed to be profitable. I think we all understand that. When you're trading, you obviously want to manage risk in a way that makes sense for yourself, with using maybe a combination of stop loss marks programmed into your trades, or perhaps hedge positions, waiting as buy stop or sell stop hedge positions that can cover you if things break the wrong way too bad. But in some way, you should think about managing risk. And if you're using the AvaTrade Go mobile app or AvaTrade's web trader platform, you've probably already noticed, and for those of you that are new to things, I would advise check out those options for trading on. They trade right over top of your MT4 and MT5 accounts, and they've got a unique feature for managing risk on gold, silver, and all FX pairings called Ava Protect. That feature allows you to cover against any and all losses for defined time periods for a small premium cost. And we'll take a look at how that works in a moment. We'll even take a look at the web trader platform to look at some of the movements now and information that's coming in. So keep all of that in mind and understand what we go over is not meant to be financial advisement, but is coming from an educational perspective to hopefully improve upon, or if you're brand new to things, start building trading strategies that in the end will hopefully be more profitable because you're applying a little bit more knowledge and technique to your entry and exit points. So in general, what is technical analysis for you newbies? It's looking back at the candlestick charts, or the type of charts usually we're looking at in trading. And when we look back at those charts and try and find patterns that maybe look predictable, that tend to repeat themselves, that's what we call technical analysis, using the historical movements on the charts that show the price movements to find places where we think it's opportunistic to get in and out of trades. That's the idea of technical analysis, and it's actually pretty simple. And we'll go over those techniques of manual methods of technical analysis today. And then we may also add maybe an indicator onto the charts to see how that can assist you as well. I do recommend that before you start using indicators, you understand the manual methods of technical analysis so that you understand the weaknesses that indicators can have, meaning the indicators don't know it's an election, right? They don't know who's winning or who's losing. They don't know the fundamental news and headlines that are breaking. So the indicators are just looking at the technical analysis, and based on the algorithm programmed into the indicator, giving you a signal of whether to buy or sell. And so as those indicators do that, you have to understand they're limited. And you, as a human being that can adapt and not only read the chart, but also understand the fundamentals of what's happening. And we'll take a look at examples of trades we took in the last webinar We understood the fundamentals. We preferred one direction over another. So we only accepted the technical entry points for the direction that we wanted to trade based on the fundamental news, and it worked out quite well. Had we been taking the technical entry points for the opposite direction, working against the fundamental news, it wouldn't have worked out so well. So you tend to do better with your technical analysis if you first figure out which way is the wind blowing with the fundamental news, and then look for opportunistic entry points with your technical analysis that goes in the direction that you believe the wind is blowing, so to speak. Okay, if anyone has questions as we go along, please feel free to ask at any time. If you want to give input, suggest ideas, if you think we missed something, please feel free to add. I'm happy to share ideas. It really adds to the conversation and helps others as well to learn right along with you. All right, so as we look at the charts, then that's our web trader platform, by the way. We'll start out on our website here. So on the main website, you'll notice that if you look at the types of trading platforms, one of the options is AvaTrade Go. So if you come here with your mobile device, your phone or your tablet or whatever, and you click on AvaTrade Go, you'll see that your app store has the AvaTrade Go app. And so these links will take you right there. You can just do a quick keyword search in your app store and you'll find AvaTrade Go. It works on MT4 and MT5 accounts. What's nice about it is it has nice features for managing risk, like AvaProtect, where you pick the length of time, whether it's 1 hour or 6 hours or 1 day or 2 days, etc. And it gives you a premium cost that you pay up front as you open the trade. And then no matter how much it might go the wrong way during your trade, during the covered time period, I should say, when that covered time period ends, any negative floating gets added back to your balance and the trade can keep running. Or you can close the trade during the covered time period. If you think, oh, it's about to go the right way now, close the trade, collect on the payment from AvaProtect and reopen, and then ride the wave back in the correct direction if that's what you feel will happen. So AvaProtect is a nice feature you can work into your trading strategies. I don't think it's right for every trade in every situation, but especially if you expect volatility and maybe really large potential profits, but you also say, wow, there could be large potential losses too, then it makes sense. Go after your large profits, protect yourself on the downside for a small premium cost for a defined time period that hey, I can be patient with this movement, because we all have had times where the movement goes the wrong way, hits your stop loss, then it goes the right way and you miss the movement. And you ended up being right. Well, by having this type of protection, it can go 10 times further than you would have put your stop loss in the wrong direction, then go back the right way, and you never had to close the trade, and you never had to risk more than you wanted to. And then it could end up going the right way, and any profits are yours on the trade. Again, the only cost is the cost of the premium when you open the trade with the protection. So it's a nice feature. You'll also notice that when you do the take profit and stop loss, that it calculates based on your trade size. Okay, pick your trade size up here. When you put your stop loss, it'll tell you how much you're risking to your stop loss, and it converts it to your account currency. So the order window, before you ever place the trade, is acting as a trade calculator. It's converting to your account currency, telling you what you're risking. Okay, same with the take profit. You put a price in that, it tells you how much you'll make in your account currency if it hits that price. So very convenient. It also tells you the margin requirement. As you put the trade size, it tells you how much is required to go to margin. Okay, so very useful. Yes, the webinar, I guess you're not going to hear me if I answer. Type okay if you're hearing me. I have someone complaining they're not. Okay, that's enough responses. I can see we're up and running good. Please check your audio. All fine for all. Okay, so just letting that person know it's just them. Okay, so Natalie, let me read your question. Okay, good question, Natalie. So she's asking, is it better to trade with the technical analysis today? Where should you put your stop loss, take profit? Listen, today is going to be very unpredictable. So that's a very good question. And so that makes it a very good day for technical trading. Because today, can you really get a handle on who's going to win the election in the US? And even if you knew who was going to win, how will the markets react? And I'm going to show you some articles that tell you it's a bit confusing as to whether the markets like Joe Biden or do the markets like Donald Trump. So there's a lot to that. So we'll cover those ideas, Sonia and Natalie and Patrick, as we get going. So here's the web trader platform, by the way. Just like the AvaTrade Go mobile app, it has all of those features we were just talking about in the order window. So let's say I think, oh, there's going to be big volatility. I want to trade on gold. I bring up gold into my favorites area. Okay, and so then I'm looking at, there it is. I'm looking at, maybe I want to buy on gold, I think. Okay, I would have looked at the chart already, right, first. But let's pretend I'm wanting to buy on gold. We did our technical analysis, and you see right away, let's say I decide I want 10 ounces of gold. Okay, there's 10 ounces. It tells me the lot size, 0.1. Tells me how much margin I need, 95.5 USD. See, it's in my account currency. The value of the position is here, about 19,000 in value. That doesn't mean that's what I'm risking. I could say, okay, where's my stop loss going to be? Maybe I say I'm buying and I want my stop loss just below 1900. Maybe I say I want my stop loss at 1899. Okay, 1899. So how much am I risking? It tells me right here, $109 approximately. Why is that moving? Because the market's moving. It's a live read of how much I'm risking from the current price to the stop loss I programmed. So I know exactly what I'm risking. So I look at my balance and I say, ooh, that's about 5% of my balance, $100 or $109. Maybe that I say, well, that's too much. I don't want to risk 5%. So then all I have to do is lower my trade size. Let me try 5 ounces. Now I'm risking 55. And I say, okay, maybe I'm okay with that. It's about 2.5%. So this is allowing me to know exactly how much I'm risking to my stop loss mark. Same with the take profit. I could say, okay, I think that this might rise to 2,000 an ounce. There it is. My potential profit, 450 almost. My risk, 55. Wow, I like that setup, right? Then I can take the trade. What if I say, well, you know what? I want to have protection on this. No problem. Ava protect. How long do I want to protect? Maybe through the next 2 days. Okay, that costs me 112. So even if I take the protection for 2 days, $112, and I leave a stop loss, or I could remove the stop loss. I don't have to have a stop loss. If I put my protection, I could add the stop loss closer to the end of the protection, right? So now I don't have a stop loss, and I'm paying, I should say, 112 for the protection, and my potential profit is 450. So if I use the Ava protection like this, I only have to be right, once out of every 4 times, and I would profit. My potential profit's 450. I'm paying only $112 for 2 full days of protection. Through this type of volatility, if investors see fear from the election results, you could easily see gold break 2,000, right? So this is how I think it can be very useful to use Ava Protect. Right through the election, only 112 cost for the premium, potential profit 450. Okay, so very, very nice. Paulette, good question and welcome from Canada. We are regulated, and for those of you that are new to AvaTrade, if you haven't seen yet, check our website. We're regulated all around the world. Canada is a place that we're also regulated, and the rules for regulatory bodies in different places are different. And so we have to follow different rules. The leverages are different, margin requirements are different then, and sometimes the products we offer are different. I think currently Ava Protect is not available in Canada, but I could be wrong. Log into your account and look. If you bring up gold and you see Ava Protect, great. If you bring up gold and it's not there, then you know it's not available because it's available on gold, silver, and all FX pairings. The reason I'm not 100% certain is because I know it wasn't available, but I know just last month I was told we're working on having it available, because really legally there's nothing wrong with it. It's a nice feature, and it really doesn't go against regulatory rules, but we still need to get approval first, because we always follow the rules in each place that we have clients. So out of an abundance of caution, we didn't jump right in with all the features in Canada, but we very well may have that available at some point. Okay. Patrick, initial public offerings, how quickly do stocks come available? I can't really answer that question for sure, but we do have hundreds of stocks available on the MT5 platform. For those of you that maybe only have an MT4 account, check out the MT5. You can add more accounts on your same account right here from your client area. Okay, you can add another account. So it's no problem if you decide you also want MT5. We have literally hundreds and hundreds of stocks, and we have more coming. So if there's been an IPO and there's a stock that you'd like to be able to trade on and we don't have it, email your account manager. If that's me, email me and I'll ask the dealers. Hey, because sometimes they're asking, have your clients asked for certain assets, certain stocks specifically they were asking recently. So if there are certain stocks you want and you've looked through all of the MT5 offerings and it's not there, then let me know and I can request that it be added. So anyways, this platform has lots of nice features. If you go to Trading Central, it's only available on live accounts. So those of you that are new to AvaTrade, if you haven't opened up a live account yet, it's worth doing just to be able to see the full features, so that you can decide if you want, just fund the minimum amount if you want, and decide with the full features whether you want to stay with us long term. I think you'll be happy with what you find. So you can go to the economic calendar from here. You can do all kinds of extra fundamental analysis and technical analysis. These give you actual signals, okay? It tells you exactly what's found, the type of pattern on the chart. You can go from asset to asset. It tells you what's happening fundamentally and gives you the technical analysis breakdown for that asset with what we see happening. This is straight from experts at Trading Central. So all kinds of technical signals right here in your platform, and more stuff. So if we look at the others, analysts' views, more detailed information. Look at this. It's giving you the exact breakout pattern that's expected on Australian USD. Sounds pretty good. There's been upward momentum. Australian dollar tends to do good and the USD tends to weaken when there's positive economic sentiment. So these signals are updated right to what's happening exactly right now. And I have a number of traders that trade off these signals and they've been quite happy. There's no guarantee of how much you'll profit or lose, but it's real information. It's the work's been done for you. Here are the signals. Here's the information about each asset that's moving nicely, okay? And then beyond the technical analysis, it's showing you, I really like this feature, Market Buzz. It gives you a pictogram of what's trending the most in terms of fundamental news, okay? We've got Windsor machines, or I'm sorry, Facebook is the biggest, okay? Twitter is large. Look how many articles we found on Twitter that are trending right now in the news and social media, okay? American Vanguard Group, etc. Google. So you might say, well, let's go with the biggest one, Facebook. What's going on with Facebook? You click on it. Here's all the stories about Facebook that are happening right now. Talk about fundamental news at your fingertips, okay? It tells you positive news stories, negative news stories. It looks like mostly positive, right? Look, green is positive, red is negative, okay? Shows you the momentum fundamentally what's going on. So look here, it gives a prediction, may rise 16%. Okay, it doesn't say will, it says may. Yeah, Olawale, or I'm sorry, Charles, AvaProtect is grayed out on a demo. You can't run the AvaProtect on a demo. So you've got to at least open a live account to really get a feel for all of those features, okay? Even if it's micro lot trading. Okay, so, and the reason being, it's not like we're trying to keep people from having the features on a demo. You know, Trading Central is not free for AvaTrade. That's a separate service that costs money. So we can't just give that away for someone who maybe is not really serious about opening an account. You don't have to trade. You could have access to it, just fund a live account. But also the Ava Protect, the protection is actually combined with our Ava Options platform, giving you an option backing up your first primary move. So the reason we can offer Ava Protect is because we have an Ava Options platform and we can't connect to that with demo accounts. Okay, so there's a reason behind why you have to have a live account to really experience all of these features. But honestly, this is great. And yeah, Tesla looks very cool right now as well. I agree. If we look at Tesla, it's got some things going on. So with that said, let's go ahead then and take a look. What are the headlines right now? Wall Street jumps as Americans head to the polls. If you go on to read, investors are betting that probably no matter who wins the election, that there's going to be more stimulus. For sure, investors believe that if Biden wins the election in the US, the Democrats love stimulus, especially when they get credit for it. They were really blocking it when Trump was trying to pass it because politically they thought that was a good move to not let the stimulus go through before the election to kind of punish Trump. And maybe it worked for them. Maybe it's going to help Biden get elected. But in any event, I think pretty much regardless of whoever wins, Trump also wants stimulus. So both sides want it. And once the election's out of the way, I think investors are betting there's going to be trillions of dollars of more stimulus. And even though, hey, that's not good for the strength of the US dollar, maybe in the long run, it's not good for an economy. But in the short term, Wall Street loves the easy flowing cash, low interest rates, easier loans, extra money for business, etc. So I think it's not a question of if, but when, how soon after the election will a stimulus package be passed. So that's really what's spurring everything to be green here. You see the futures were green all day. The market opened green. The Dow Jones is up over 500 points. And we see the volatility index, what's referred to as the fear index, is down nearly 5% right now. It was down even more earlier today. The market's pulled back a bit. But if you look at this, is this positive sentiment or negative right now? I would lean towards positive sentiment. So I think the market really is not saying they know for sure who's going to win the election. The market is positive today because they feel assured that there will be more stimulus eventually here, sometime soon, perhaps. And so fear is down, volatility is down, and usually when that is red, when the VIX index is red, the fear index is down, then usually everything else is green. And that's exactly what's happening today. Okay. Niali, good question. We were looking at the web trader with Trading Central. It's not, I don't think all those features are available on AvaTrade Go for the Trading Central. You could check, but I believe Trading Central would be much better to use on the web trader platform like I was showing you here. Okay. AvaTrade Go is the app, and it does have most all of those features we were looking at. You might be able to access Trading Central from there. Check it out and let me know, okay? All right, so then we're looking at some other articles beyond the fact that there's positive momentum today. We look and we see risk of contested vote as U.S. allies on edge. So now that's a negative headline, right? Doesn't that put a cap on the positive momentum? Maybe tells you why with that initial surge up, things kind of flattened out and pulled back a little, okay? Because there is some fear out there that come tomorrow, there's not going to be a clear-cut winner because the U.S. went to mail-in ballots in a huge way. And mail-in ballots in many states, they're not allowed to start counting them until the polls close today. And then they have millions, literally millions of paper ballots to count. And so this could take days. Pennsylvania estimated at least 3 days to count them. And so there's fear that there's going to be bickering and fighting back and forth, and that there could be more riots in some of these cities, like the riots we've seen. And so there are a lot of cities boarding up businesses in these bigger cities that tend to be, I guess, more Democrat-run cities. These groups like Antifa and others are kind of bent on wanting to maybe cause some more destruction, unfortunately. And so the idea here is there's some fear out there still, and so all that positive momentum could be capped with some of this fear. Okay. Yeah, Niall, ask your account manager if it's not showing on your web trader. If you have a live account, you should have access to Trading Central. Okay, so some fear about a contested election. U.S. factory orders rise solidly. That's positive news again today. All right, they rise solidly. The outlook is uncertain because the election is uncertain, and U.S. policy, therefore, then is uncertain moving forward. You know, Biden promises to raise corporate taxes back up, to add more regulations back and undo the things that Trump did. And Trump promises to keep taxes low on businesses and regulations low. Trump says he'll even lower taxes further. And so the outlook, of course, is uncertain then. You have two completely different views of how to run the economy, and we don't know who's going to be running the economy. The short-term outlook is good. Factory orders up. Potential stimulus coming soon. So we understand there's mixed momentums potentially moving forward, though. These were the numbers that came in. Factory orders higher than expected, over 1% increase month over month for factory orders. Okay, so with that understood, we can then go to the charts. Let's go to my demo here. You can be on your live accounts. Quickly, we can take a look at what happened from the last webinar. So if we go back and look at the account history, these were the two trades that we took on the 29th that we had longer term moves on. And why did we buy on crude oil and the S&P 500? We did that because the fundamentals told us positive momentum. Then we did our technical analysis and found that there was a pullback on those, and they were at a nice entry point above a support level, etc. And so then we went in the direction of the wind from a proper technical entry point with a limited risk to our stop loss and much larger potential profit. And and I could pull up more of the history. I don't know why I only have these two trades showing. Here, I'll just do all history. And you'll see the other trades that we took on, and I think we need to get to the bottom. There we are. The other trades we took was a gold trade that failed, but you see the risk reward. Just like I was setting up that example with AvaProtect and showing how much we're risking with the cost of the premium as opposed to the potential profit. It was like 4 to 1 potential profit to risk. So gold went bad. We didn't get them all right. This one went bad. We were scalping here. We lost $1. Okay. We lost one for 386. We won the other two. In fact, we could have ended up winning just one out of these three and still profited. We ended up winning 2 out of 3. Okay, great. So it was a few $1,000s plus in profit. So it's not about winning every trade. It's not about having to risk a ton out of your balance. You know, my demo account here has about 100,000. Each of those trades won, 1,500 on average. So what is that? 1.5% gain on each trade. We lost one, we won 2. Maybe we gained 3% on the account, 2.5% on the account from that day's trading. Great. That's a good day. You understand, if you gain 1% per day, that's pretty good return. If on average you're gaining 1%, some days you lose, some days you win 2 or 3% like I showed there, that in the end, that works out nicely. You could be 20% a month or so if you can average 1% for every trading day, about 20 trading days in a month. So with that type of return, and sometimes people say, well, that's not exciting, 1% gain. 1% gain can double a balance in less than 6 months, can double your investment. That's a great return. Okay, at least I think so. You might not. Some maybe want to gain 20% in one day. It's up to you. I've seen a lot of people blow accounts that way. You don't have much flexibility to stay with movements and work strategies if you expose too much per position. But in the end, again, this is not financial advisement. You can risk per trade how much you want. Some will risk only 1% per move. And if you win 2 out of 3, like we showed there, then hey, you're up more than 1% on that day. If you can average that, that's a nice return. Okay, so what we're looking at here on gold, look at this. Huge climb. And if we look after the climb today, look at the resistance level here. You see that? Over here, resistance, 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 drop. Now it climbed up to the resistance and is testing it. So a couple things you can do here. You can go for a scalp and say, okay, I'm selling on gold. Okay, great. I sold on gold. Okay, I did one lot because I have 100 and something thousand in the balance. You might do 0.01 if you've got a small balance, or something in between, or even something larger. I have plenty of clients I know with more than 100,000 in the balance, and they would trade with a lot more than one lot. But you could look to do a scalp here, saying, okay, short-term move. I think it'll, even if it's going to break this resistance, perhaps it will pull back before it breaks it. That's a possibility, right? So then I could say, okay, my stop loss will just be up here, maybe at 1912, just above the resistance. If it breaks it, okay, then I'm out. So I could say modify, stop loss 1912. Where's my take profit? Maybe at 1906. Okay, so there. Potential profit twice what my risk is, approximately, just by the eye here. Almost twice the distance to my potential profit down as my risk up, right? And so that's just setting up with a scalp move, because look at the resistance level here. And these are 1 hour candles. So that resistance has been there for a while. And look at the plunge here from that. So you could see a little sell-off before it breaks the resistance, okay? Even if it eventually will break the resistance. Just a technical strategy of finding a resistance level and selling. Now, there's been positive momentum on the market today. And believe it or not, even though gold is a safe haven, again, it's proving true again. And we've talked about this in the past weeks, past months, really. Ever since the pandemic, when the market is rising, so has gold. The markets have gone up with gold instead of the opposite, where when markets go up, the safe haven gold used to drop. And when there was fear and the markets were dropping, gold would go up. Lately, when the markets go up, gold has been going up. And when the markets go down, gold has been going down. In any event, I think we're going to see some swinging movements today, right? Up, back down, maybe more in one direction than another. But I think we can respect some of these resistance levels, maybe, at least for a short period of time. So we might go to 4 hour candles and say, okay, what if it breaks this resistance? Well, okay, if it breaks the resistance, then maybe we're buying up here. Okay, so at the same time, I could be scalping and saying, okay, I just made $30. Okay, there's my scalp. I just said, I think it'll bounce down before it breaks the resistance, even if it's going to break it. The odds were in my favor that it would at least temporarily pull down. So now we go to the account history and we say, okay, we just made $20. Okay, good. You know, if you do 5 of those in one day, that's $100, right? That's 1% of 10,000, right? That's 1% of 10,000. So, yeah, gold is like an umbrella always, Natalie says. Okay, I can understand what you're saying. And so what we're looking at here is a resistance up higher, right here. Okay, now that we profited on the sell, right? Now let's look at maybe some longer moves. What if this breaks this resistance? The potential for gold to go huge today is huge. Why? Because it's a safe haven asset. People love to buy into it when there's swings in fear and momentum on the markets. If this resistance level breaks, and hits, let's say, this price level here, then maybe it's time to buy, right? So let's say it hits 19.15. I'm going to go a little bit higher. Okay, let me just activate this line and whoa. My MT4 is jumping around on me. Let me just zoom in a little. There we are. Okay, that's a little trick. If if things are jumping around, zoom in, zoom back out. Okay, so maybe I say I want to clear this little wick right here, this resistance level here too. So maybe I say if it hits 19.15, then I'm in. Okay, what kind of pending order? And by the way, the web trader and AvaTrade Go, you don't have to know what kind of pending order. If I want to buy from 19.15 on the web trader, let me show you. On the web trader to buy from 19.15, all I have to do is, bring up gold if that's what I want. Okay, and then as I look at gold and I say, okay, I want to buy, but I don't want to buy yet. I want to buy from 19.15. So it says execute when price hits. So I can say execute at 19.15, and that's it. Now I can buy it, and when it hits 19.15, I'm in. I never had to tell it that it's a buy stop or a buy limit. It knows automatically. I don't have to know that. I just tell it where I want to buy from. I can put my stop loss price and it'll tell me how much I'm risking. Maybe I want to risk $6 or $6 per ounce. So maybe I want to go to 1909, and maybe I want to trade 100 ounces. Okay, one lot. So I know how much margin I need. I know my stop loss to 1909 risks only 600. That's like 0.5% of my balance, 0.5%. And my potential profit, if my take profit is, let's look at the chart. Let's go back to the demo. We were looking at this line up here. Maybe my take profit's at 1928, just before this resistance up here, 1927, something like that. So if that's the case, then take profit, oops, wrong spot. Take profit 1928. Okay, my potential profit is $1,300. My risk is $600. That's better than 2 to 1. There I am, buy. Okay, now I have a pending order going. Here's my orders. Click over here, right? And here's my pending order. See, it's a buy. I don't have to know that it's a buy stop. It already knew to make it a buy stop. If I look in my MT4 account for this account, I'll see the trade running and it'll say pending order buy stop. It'll tell me the type. Okay. Now back to the MT4. When I want to change, when I want to do a pending order, I've got to switch to pending order, and then I have to know, well, which type is it if I want to buy from 1915? Well, I have to know that it's a buy stop, the type of pending order that buys from a higher price than it is now. So 1915. Okay, and then take profit 1927, and stop loss 1909. Okay, there we go. So strategically, we don't enter until we have a confirmed uptrend, a breakthrough of the resistance level. Once that happens, maybe we're convinced, wow, something happened with the elections that gold is probably going to rush up further if it broke through the resistance, right? That's the idea of buying from a higher point. You're willing to sacrifice getting in at a worse price, waiting for it to go higher to buy, for the benefit of knowing that it broke the resistance and there must have been big news to drive gold up. And many times when resistance breaks, you have a big breakthrough candle like you see here. This candle broke below that price. Look how big that candle is. So if it breaks above that price, you could see the same sort of candle. Okay, so the idea is waiting for a breakthrough, getting in when you want to catch the wave, so to speak, to ride the wave. of momentum. That's the idea of a buy stop. Doesn't always work. That's why you put your stop loss right back below that broken resistance. If it breaks back below what should now be support, if it breaks above the resistance, that should be support, and hold it above. If it comes back below, you got your stop loss down there, just back below that broken price level. And your take profit is just before the next major resistance. Because if it's a true breakthrough, there should be enough momentum to potentially carry to the next resistance level. And so very strategic setup. And the reason you set up like this, especially on a day like today, is because you know there's the potential for large breakthroughs. You have that potential there. And trading is all about potential. It's not about being right all the time. It's about being smart. Okay, entry points and potential. And so if you're winning 1 out of 3, 2 out of 4, 2 out of 3, and your payouts tend to be larger than your risk, you're onto something. Okay, you can profit even with 50% win percentage, not because you're right about winning and losing, but because you're smart about winning and losing. And if you get good enough with your technical and fundamental analysis, there's also no reason why you can't be right more than you're wrong. Now you're really profiting, okay, at an even faster rate. So we could also look at some of the indices. NASDAQ, you see it pulled back a bit, just like gold was pulling back, right? This is a sign, NASDAQ pulling down. I'd be willing to take a shot at gold dropping further again. I see momentum in the NASDAQ dropping. Very likely gold will follow. And it's weird, but that's what's been happening with gold through this pandemic. It has followed the markets down and followed the markets up. You can speculate about the reason why, and it really doesn't matter why, as long as that's what's happening and you catch the wave, you catch the movement. And what we can say is sometimes one asset is a leading indicator over another. And so if we see gold followed the NASDAQ up today, which one happened first? Well, now the NASDAQ is dropping. We see a big red candle. So if gold has been following the NASDAQ or the S&P 500 or the Dow, which it has, and one of them's moving first in a large way, then maybe that's a leading indicator of what the other one might do. Okay? So many times you'll have your screen split, right? And you could have gold on one side and NASDAQ on the other. And whichever one moves first, you trade on the other in that same direction if you feel like one is a predictor of the other. And sometimes one moves before the other, and sometimes it's the other one that moves first. Whichever one breaks in the big move, maybe that's a sign that the other will also go. Okay? So that's just an idea. Now here's 5-minute candles and 5-minute candles. Okay? And so as you zoom in, you get a better idea of what's actually happening. And I see NASDAQ reached a support level here. You see this here? NASDAQ's on a support level. Support, support, support. It looks like the NASDAQ might push back up. And so maybe since we're on a support level, NASDAQ might bounce because gold didn't really drop so much yet, right? So then maybe you say, let's do a scalp. I'm going to buy on NASDAQ. I'm going to put my stop loss just below this little support level, so I'm not risking much, 11,255. And then boom, there it went, and I just made $500. Okay, that's how quick it can happen. Okay, so I'm looking and I saw that NASDAQ led down, and maybe gold would drop, but then I zoom in to a smaller view on 5-minute, 15-minute candles, and I can see, NASDAQ formed a support line, and gold is still up. So maybe it's gold that's leading, and now I see, as long as gold didn't drop yet, and the NASDAQ is at a low point on a support level, then I'm thinking NASDAQ should bounce, and boom, there it went, right? So very simple to gain an advantage just by understanding the relationship between the technical analysis of one asset to another. If we were doing the same thing I just did now, but with, let's say oil, and we could take a look. What did I make on that little scalp? $421. Okay, so now I'm getting close to my 1% per day, right? Without even doing any long-term moves. I'm covering the risk to my stop loss on my long-term move with my couple scalp moves. Okay, it's another way to look at it. So now I'm risk-free. If gold breaks through and hits 1915 on my buy stop, I already covered my risk with the two little trades I just closed on the little bounce off the support level and the other trade. Okay, now what I was getting at is let's do a little quiz. If I'm doing technical analysis on oil and I see oil just went up and broke through resistance like it did today, what currency pair, what currency in particular, from what country would I expect to strengthen? Whose currency strengthens the most or one of the most when oil goes up? Whose economy does that help? Yeah, Canada. I'm thinking the same as you, Canadian dollar, not because Canada exports the most oil, but because oil is the highest percentage of their GDP compared to other countries. They're not the biggest oil producer, but it's the biggest chunk of GDP for Canada. It's their biggest product. And so as oil price goes up, so usually does the Canadian dollar. So if this, instead of being NASDAQ and gold, was oil and the Canadian dollar that we're looking at, if we just saw oil break through a resistance level and go up, and the Canadian dollar happened to pull down to a support level, hey, maybe we're buying on the Canadian then instead of buying on the NASDAQ like I just did on that bounce. Now we see gold dropping and the NASDAQ dropping, right? There's both pushing down now. That's how quick you can bounce off a support level, get out, and now wait for the change in momentum. Let me give you another quiz. What if the China 50 went up and broke a resistance level or went down? Either way, it doesn't matter which direction. If China's economy looked like it was surging in one direction or another, who's the biggest? Who gives the most part of their exports to China? Big export nation of iron ore and coal to China. Whose currency then could you do technical analysis on? If you saw the China 50 make a big move, whose currency might you look at? Yeah, the Aussie, the Australian dollar. So we could do setup where we're looking at the technical analysis of the Australian dollar and the China 50. If I see the China 50 break a support level and plunge, and the Australian dollar happened to bounce up at that moment, boy, that's a nice spot to sell on the Australian JPY. And why would I put the Canadian against the yen or the Australian against the yen? Because the yen should strengthen if the China 50 is plunging, because the yen is a safe haven currency. So if the China 50 is plunging and the Australian should weaken, then I probably want to put the Australian against something that should strengthen so that it magnifies the effect of the Australian dropping following the China 50 down. And so since the yen should strengthen when there's an economic fear, you pair Australian JPY and compare that to the China 50 movements. Okay, so and by the way, this is how people form algorithms, right? This is how you create an auto trading robot. If you expect when one moves before the other in a significant way that the other might follow, then maybe you program, if this moves that much, then buy or sell on this in this direction. And that's how you create a program, right? So right now we're programming our brains to think that way. So I see the NASDAQ breaking a support level now, right? It just broke that little 5-minute candle support. So maybe I say, okay, let me take a small shot on gold. Whoops, 0.1. All right, so again, I didn't get my point. 0. Oh, I have my caps lock on. That helps. That's easier, right? So sell, okay? Why would I sell? Because I see NASDAQ broke the support level on my technical analysis, right? Why did I go with a smaller trade? Because the fundamental news was positive today. I'm going against the fundamental news, so I'll probably be a little less aggressive, right? Now, with my demo balance, I probably would have done 10 ounces instead of 100, right? I didn't have to do 0.01. I could have done 0.1. But I wanted to emphasize the idea. You can technically believe in going a certain direction and trade on it. But if you know you're going against the fundamental news more, maybe you trade a little smaller. It's okay to go against the fundamental news. Fundamental news changes sometimes. This is a purely technical move. It broke the support level, and it did it before gold moved. So now gold moved. Now I'm up, 5 cents. If that was a full lot, I'm already up maybe something significant enough to close. Okay, but the idea is we see the initial move. Okay, we see it overcame the spread already. It moved into a small profit. We could have already closed it with a larger trade, and it would have been significant enough to take that profit, right? So maybe we put our stop loss up here at 1911 now. I'll let this run a little bit. Let's see if the signal from NASDAQ, let's see if NASDAQ's signal comes through for us on gold for a little bit of a drop. We'll see. We're due to have a failure. You don't win every time. But let me put my stop loss up at 1911. And my take profit, I'll go after 1907. Just a small scalp. Okay, so about an equal potential profit to risk. And since NASDAQ broke the support, and we see the movement all day today, they've been following each other. One broke the support, the other didn't. So we're waiting to see if the other will. Okay. And we already have our buy stop on gold up here. If gold breaks on the way up, just as quick as we get out, if we hit our stop loss here, we've got a buy stop up here at 1915. No problem. We'll take the technical breakthrough and change directions. That's called trading without a memory, right? If you keep trying to prove yourself right, no matter how much it goes the wrong way, you keep going in the same direction you initially thought, you can blow an account that way, right? So be willing to trust your technical analysis and be willing that if the technical analysis changes and breaks a price level in the opposite direction, be willing to change your mind. It's okay. It's okay to admit you're wrong on a move. It's better than punishing yourself and maybe allowing yourself to lose more than you wanted to on a move. So we could also look at the DAX. It's on a support level. It didn't break it yet, right? And some people study just indices. You might say, if I see the NASDAQ and the Dow both break a support level, then I'll sell on the DAX if it hasn't broken the support level yet. Something like that. You can find trends. You can see there's a relationship between different assets, okay? And that's kind of what my focus is right now on strategy, I guess, for this session, because there's a lot of breakthrough moves that might happen today. And some indices move before others, but they tend to follow each other globally. So you can start to set things up as you're watching the charts and see what happens. It looks like the DAX really is trying to break this support level following the NASDAQ. It's really trying to. It'll be interesting to see what happens there. Let me pause. We've been going almost an hour now. Any questions before we end things? Okay, Natalie, yeah, you're welcome. All of the sessions are recorded. They're on our YouTube channel. There's a designated page on our YouTube channel that have all the English webinars. You'll see mine, which don't have my name. They just say live market analysis of fundamental action, live market analysis of technical action. Those are my titles. And there we see the DAX breaking that support level. It just broke it. So if you had a decent sized position, you could have maybe have already scalped the profit there. And you'll also see Naeem Aslam, who does English webinars, who is our chief market analyst. So he actually has something every morning that you can look, a short few minute synopsis of what's happening on the market each day. It's there on our YouTube channel each morning. Okay, so check out all of those recordings. I think they could be very helpful for you, along with the features that we've seen available in the web trader there. I think it really can help you. Natalie, it's okay if you're not native English. That's another reason why those recordings are there, because I think it can be helpful to go through and pause and re-listen to things. And there we see the support level broke. It just broke through. Gold moved into profit again. Okay. And so, boy, the technicals have been easy to read, I guess. So far, we're 100% on our moves. Okay, so thank you very much for attending. Good luck with your trading. I think there's a lot of huge potential profits that you could make through this election tonight and through the rest of the week. So good luck with your trading, and I hope to see you in the next webinar on Thursday. All right, bye for now.